multi-streaming all over our social media and any platform that we are holding in social media actually. So today, ahead of Fed, we decided to give you a quick briefing of what's going on so far, what you should take care, why Fed is really on the focus, and what is else to see from earnings front. Okay, so let me double check that you can see me in both in every single channel, in every single platform. So yep, excellent. And I'm not quite sure about the sound. Hopefully it's fine. Yeah, it is. Okay, I have just confirmed. So excellent. So let's start. Okay, before I show you my charts, I would like to do a quick briefing. So far today, from data perspective at least, we have seen okay, chart is on, perfect. So from data perspective at least, we have the latest data that we have actually was the Canadian data retail sales just half an hour, if I'm not mistaken, earlier. So they actually soared to 4.8% in February after a really flat reading in January. So we have seen the sales improving in March quite significantly, even though the Canada is really facing a third wave. So the outlook hasn't turned into the recovery story yet. So the reports, however, remain consistent with strong consumer demand, also supported similarly with what happened in Europe, similarly with what happened in the US, supported. So this strong consumer demand, okay, is backed by stimulus from central banks, and we have seen also an improving labor market similarly to other countries in the world. However, as I said, Canada is currently facing a third wave in COVID, so we have increased restrictions back, especially this month in April. So the restrictions are back in April, and that is something that puts some kind of a risk or some kind of a ceiling limit on the recovery story. Okay, but after all, while we have the restrictions, the upbeat news on vaccine remain consistent with this ongoing recovery story that we are seeing in Canada in 2021. Okay, so this is driving consumption gains. So good data from Canada so far. Okay, earlier we didn't have significant data out actually from Europe or from US. We had overnight the inflation data from Australia, really disappointing the markets, and that's weighted on the Aussie. That's why Aussie started the day under a lot of pressure. However, just before I start talking about the Fed, what's expected and so on and so forth, I will say that because of the Fed, ahead of the Fed, overall this week, but more precisely today, we have seen a lot of choppiness, a lot of sideways movements, a lot of small movements, and that was on the anticipation of the Fed, okay, of the FOMC. And I should highlight right here that despite all this indecision or anticipation that we were getting in the currency market, however, and I should show you my chart actually, however, because it's also an earnings season, okay, and we have seen some very good strong reports so far. In general, the stock markets they're actually managed to sustain the highs, the record highs, or very close to the record highs. So where we are standing right now, we have bonds extending declines, okay, continuing to weaken in a bear steepener after we have seen the treasuries rising significantly yesterday, so they were significantly up. So that's why we have seen bonds and stocks slightly lower, but stocks, especially the US one, were quite well supported ahead of the Fed. Okay, so even though treasuries rise and supposedly or theoretically the stocks should have declined, however they kept supporting because ahead of the Fed, as I already told you. So that's the same thing. Bonds, stocks, near term under pressure, but kept close to their highs. Treasuries to the upside, while also inflation concerns, supply and worries over central bank tapering later in the year weighs on the sentiment. So this is why the Fed is on focus today. Okay, and why we've seen so much weak trading, sideways movement. And I will show you right now what I mean, actually. Okay, this is, for example, dollar yen 1 hour chart. It's been sideways since the beginning of the day, bouncing within 108 and 18, 109. This is cable bouncing 138.60, 139. And if we focus on today's trading, which starts around here, you can see a bit of a dip, but an ups and downs, consolidation ahead of the Fed. Euro, same, sideways, shopping around its first support and pivot point. This is dollar, stuck at the 91 territory. So in general, we have a lot of as I stated, a lot of indecision. Actually, market participant has taken a step back ahead of the Fed. So let me okay, before I move to Fed, explaining why is remains in the spotlight today, I would like also to inform you like quickly of what happened overnight. So if you're not following our website, you should actually. So our analysis website. So we have posted earlier, I have posted actually, and Stuart as well, earlier today, some of the movers overnight and so far today. So we have seen actually, other than the weaker than expected inflation in Australia that weighed on Aussie, it seems that the India situation in Japan, but more precisely India, and those continuous rising COVID cases are really threatening the sentiment, because there are some fears over developing inflationary pressures due to this situation. Okay, so overnight the news were like focused on India, and the hot spot of the world right now, on inflation from Australia, on earnings as well, which they keep extending higher. And what am I missing? I'm not sure what I may missing. I think that they were the key events overnight. Okay, so far today, wow, the calendar was a bit empty, but we had yesterday, this is what I was keep forgetting. Yesterday we had earnings as well, and we had Microsoft and Google reporting, Alphabet. So that's another reason why stocks have been well supported. So if I jump to an S&P 500, for example, okay, you can see that it peaked to nearly 4,200 yesterday morning, okay, and remains well supported. And that one an additional reason other than the Fed is also the better than expected earnings. Okay, so that's why the stocks were a bit mixed. From one side is the uncertainty of Fed, but from the other side is the earnings that that they were actually jumped and beat expectations. So Microsoft reported. Actually met the quarterly sales expectations and beat profit estimates. However, we have seen Microsoft declining a bit, the share declining a bit. I'm not sure whether I have it somewhere here right now. I have an Alphabet for sure. Here it is, Microsoft. Let's see the 1 hour chart. So we have seen it. Okay, it hasn't really opened yet, right? Exactly. So let's see DMAs actually. Let me go to the MT5 instead to see the shares over here, the DMA stocks over there. You can see Twitter because I had just posted what is expected from its earnings, which is tomorrow after the market closed. So we need Microsoft. Let me clear. You cannot see it. Okay. Let me share. I want to share the MT5 with you. Okay, excellent. So Microsoft. So guys, whatever happens, okay, whatever is happening all over the world is an earnings season. And you have already seen how strong the previous earnings seasons have been due to the pandemic. So it's good to keep yourselves up to date on what is expected for each company and how it could likely support, or what could likely impact, how it could likely impact its share. So over here we have Microsoft beating expectations, as I said, beating profit estimates, and however, we have seen, so it's not open yet, just to clarify, okay, that it hasn't opened yet. It will open, I think, in 15 minutes time, if I'm not mistaken. But we have seen that it was well supported by the better than expected earnings report, even though initially, can you see this dip? Or, okay, that was on 22nd, then rise on 23rd, rise on the Monday 26th, and then dip slightly again prior then earning releases. So that was a bit of a selling. Oops, what have I done? Sorry, a bit of a selling, as I was saying, on some kind of pre-market trading on skepticism ahead of the earnings, which we could we are seeing something like that very often, especially before some very big news, big data releases, and so on and so forth. Google, on the other side, otherwise Alphabet, the parent company, also beat estimations, beat expectations. So it reported actually a record profit for the second consecutive quarter and a 50 billion share buyback. But, okay, let's see the share first. Alphabet it is, spiked to okay, here we are, spiked on 23:40 on the 26th afternoon 26, but then it dipped despite the better than expected excuse me, despite the bit of earnings estimates and the 50 billion share buyback, but apparently it fell a bit lower. That's Alphabet. on the warning that the surge in usage and advertised sales during the pandemic may slow down because we are getting back to normal life. Not yet, but with the vaccination, keep moving. We might eventually move back to our normal uh, um, our normality. So that suggests less remote working, maybe less online shopping, and also maybe a detection of um, of as I was saying, of the usage and advertised sales, similar to what we have seen during the pandemic. So that was just for your information. Tonight, actually no, tonight, Facebook reports. I'm not sure who else, but definitely Facebook. And tomorrow you should take care. You should keep your eyes on Amazon and Twitter, MasterCard. Okay, so let's get back to what is going on to the markets. Okay, so let's get back to dollar and why it's been so choppy. So, okay, we are 2 hours, or let me double check. Where is my dollar index, by the way? Here we are. Okay, can see your questions. Okay, one team from Swaziland. Nice. Have a great day ahead, guys. Euro trend, please. Okay, I will get back to you. Have a nice day. Euro yen, and you spotted the yen is a nice. It has been quite interesting today. Will the dollar continue falling if Powell sounds dovish? Is supposed. Traditionally, this is the case. One could see dovish tones, dovish hints, dovish comments from Fed in general. That should wait further on dollar, my dear Wadlin. So, okay, before I reply to your question, I can see that a lot of people are asking about euro dollar, euro yen, dollar cut, and so on and so forth. Let me quickly make you a quick briefing of what you should take care today. Okay, so what is weighing on the sentiment is Fed. Okay, but more precisely, there are speculations that Fed today, okay, will actually hint that they might need tighter policy sooner than what was expected. So that's the resume. That's what is causing all this uncertainty ahead of the Fed. So even though it is unlikely Fed to change anything today, to change the monetary accommodation, because we have already seen two massive rounds of stimulus, so it is very, very unlikely to change the current or to extend the current monetary accommodation. Rates are expected to keep unchanged, though there may be talk of yield curve control, okay, because of the higher bond yields that we keep getting. This is on the spotlight right now, but other than that, even though no surprises are expected, no changes in the outlook, however, the focus is on Mr. Powell and the press conference because we might see them confirming a tighter policy sooner than what is expected. I mean, if they were expected to tighten the policy like in 2023, they might shift that deadline. So that's in focus, because despite the recovery, still the Fed cannot be very happy until the labor market is back to pre-pandemic levels. Okay, so this is still a very important, actually, maybe the number one reason why Fed might not be as happy as it's supposed to. So they might stress a bit that they need substantial further progress. So yeah, this is where the attention focus on. I'm sure that I'm missing something, but also, even though also, along with with Mr. Powell, we had earlier Mr. Biden unveiling 1.3 trillion proposal to expand Social Security in the U.S. But it's likely to, and he will actually, after the Fed, he will also speak in the Congress later. So the focus is also Mr. Biden, and any capital tax gains as well. So these are what is driving, is actually waiting on the dollar for the time being. So I think I said what I wanted to talk to you about the fundamental side, at least. So all eyes will be on the Fed at the conclusion of its FOMC meeting later today, in less than 5 hours. So we have plenty of time still. Okay. And don't forget that there has been a lot of speculations that he might start to hint that Fed could start to think about tapering, especially after Bank of Canada trimmed its asset purchases last week. Okay, so yeah, policymakers could continue to refrain from hinting that they are starting to think about tapering, and that's why conferences on focus, Powell is on focus, is expected to emphasize that there is a long way until they are in where they're supposed to. Okay, so enough of talking, enough of fundamentals. So let's see some technical analysis, right? Like you keep asking me. So first come, first served. Euro dollar by my dearest Arun. Okay, euro dollar. Okay. Euro dollar over here, 1 hour chart. So we have seen, let me put also, so we have seen a bit of a holding within, actually below its pivot and below the 20 and 50 moving average. A nice clash over here of 20 and 50 exponential moving average in this 1 hour chart, something that is actually confirming further consolidation, at least for the 1 hour chart, my dear Arun. So just before we see, so a lot of choppiness, you have seen that for the whole week. So key support is this triple bottom, this double fractal over here at 120.55, key support area for the euro dollar, while on the upside resistance remains, and another 4 times fractal over here. So key resistance level as well at 120.92 or 191 if you prefer, round it up. So very narrow trading, so nothing really exciting so far. So you should, after the Fed or during the Fed, you should really monitoring these support and resistance levels, because a breakdown of these levels could actually move could exit the euro dollar from this sideways movement, from this consolidation. So for the time being, it's stuck within 120.70 area. However, so yeah, a lot of narrow trading. I'm trading the 1 hour chart daily. However, the overall outlook remains positive. Keep extending higher. Kept a floor. Kept a floor above last week's resistance, but also above the lows of this week's. And this will be interesting to monitor. So we should monitor a bit this cross, because if it confirms, this is a crossing, a 20-day moving average crossing of a 50-day moving average crossing. So if indeed 20 confirm a break above 50-day moving average, that is a bullish signal for euro dollar for the daily chart, and a possible a continuation of this uptrend. So this suggests a near term positive bias, but it hasn't confirmed yet. We need to, maybe tomorrow or on Friday, we need to see a confirmed crossing. Now they have just clashed. So hopefully that was okay, my dear Arun. Also, Bohol asked about euro, so I replied to you as well. Tawa is the same. Overall outlook remains positive. Intraday sideways. It needs to break the 120.55 level in order to suggest a retest of 120.30 or 124.40, while a break of resistance could bring back to our attention the Monday's highs. So let's flip to euro yen. It was Bongani that asked about euro yen, and was a very interesting cross, because yen found was significantly weighted, significantly under pressure because of the low risk appetite, and also the situation in Japan, along with along with overnight. Actually, even though, this is weekly, we should put the daily on. So yeah, we had a nice continuation, nice rally of euro yen, and this is a very good question, my dear Bongani, because euro yen broke yesterday and closed above more than nearly 2 months resistance. So this resistance, this 130.80 resistance, has been kept since the beginning of March. So now we have 28th of April, so nearly 2 months, and it has decisively broken yesterday and closed decisively and far away from this resistance that now it looks to be like it could turn into support. So despite the ongoing rise, this break of these resistance levels is actually extending expanding the positive outlook for euro yen. Okay, so you see, no, you can't see. Let me put MACD on. So extension of MACD higher, RSI ready to cross 70, it's at 67 right now. Okay, so we are continuously seeing higher the extension of uptrend. Okay, so yeah, that boosts further the positive bias into the daily chart. Now we have a look on the 50 well supports the 50-day moving average, supports very well the asset in the daily time frame, so that's a key support level for the medium term. Yeah, So up. So we had a decline over here, small decline, along with a small decline in divergence, but it managed to break this descending triangle and to bounce higher. So it sustains the gains so far today. So let's have a look on the 1 hour chart. What's going on in the 1 hour chart right now? Let me put my 5 and 9 exponential moving average. So well above its pivot, it managed to sustain its gains since yesterday night, but moving sideways. So guys, in general, the yen has significantly weakened against euro because of the yield differentials. So yield differentials and euro differentials are very, very narrow. Okay, so yeah, it's due to the yields differentials once again. So yen depreciates against euro due to the yield differentials. So kept sideways between 131 and 36 and 131.66. So sideways within this 30 pips movement. Very narrow trading, flatten Bollinger's, flatten RSI, flatten fast MAs. So guys, very narrow once again. So key resistance, key support level. If the asset managed to extend gains to the upside, breaking the 131.66 territory, then next resistance areas could be seen at the pivot points, of course, 132. 132.67, but we have also the 161 Fibonacci level over here, which is placed at 132.30. So 132, 132.30, and 132.66 are the next key resistance area in case that the latest high at 131.66 breaks. Now, yeah, that was on euro yen. We have also already replied to the Dwaden. A bad day to trade. I see a lot of choppiness ahead of the Fed, but possibly on the Fed, we could start seeing volumes coming back, especially after the Fed. Okay. Dollar CAD. They're asking me about everything, but it's narrowing. Can see how narrow these Bollingers are, stuck for since Monday actually, within 132, 123.80 and 124.17 territory, unable to find direction. So we'll flip to the daily chart to give you the overall situation, which is keep extending lower and keep extending lower, and actually sorry. So we have seen Monday sharp sell-off, breaking March initial support, but retesting again more than I don't know how many years, multi-years lows at 123.80. So it's moving sideways above this latest low that we had back in March. However, the fundamentals actually, the fundamentals are providing a bit of a ceiling, a bit of a limited gains for CAD because of oil. So OPEC was supposed to take place today, but it was cancelled, wasn't confirmed. So Paris OPEC is a lot of uncertainty around it anyway. But as I was about to tell you, is yeah, remains sideways the last 2 hours, but Canadian dollar in general remains remains on bid in the long term, at least. Okay, so but on OPEC front, or in oil front, if you prefer, um, the we have actually. Let me double check the calendar. We have, yeah, the inventories earlier. Okay, so we have the inventories actually um, um, losing around 0.3% um, um, to, and that's why, let me put oil as well on. Let me put 1 hour chart over here. So we have oil. So we have actually oil over here spiking higher, and that was, let me see the data, that was on inventories coming at 1.4% from 0.1% expected. So we've seen a bit of a bit on crude over here, something that helped in the near term the Canadian dollar. However, let's not forget the situation in India and that concern in regards to fuel demand, a deduction of fuel demand um, because of the restricted lockdowns in some countries of the world. So this appreciation might find some ceiling. So right now, oil. Sorry, I shifted to oil. Because okay, so DR Tino. Let's finish with dollar CAD. So dollar CAD sideways for the time being. Key support at 138, 2380. Key resistance at 124.17. So a break of the support could extend the, could find further selling pressure down to, come on, to last month's lows at 123.60, while third support holds at 123.54. Now, in the long term, only break of this bottom over here of 123.50, it could form a rounding top. So this, a confirmation, decisive break of it further to the downside and formation of a rounding top, could open the doors further to the downside. But this is the medium and long term, okay? So now let's get back to oil. So, okay, we have seen it, we have seen that despite the situation in India, I had appreciated a bit since last week, but it still is facing key resistance area at 61.8 Fibonacci level and the round $64. So a failure to break that level could turn the asset back down, because fundamentals for the near term at least are not really supporting the oil, unless if OPEC comes out with some good news in regards to oil and some kind of a balancing due to the demand, to the concerns about demand. Because let's not forget that Japan is one of the biggest consumers, and India is one of the biggest importers. Okay, that's why the situation in those two countries could significantly impact oil. So for now, key resistance at 62, the 61.8 Fibonacci level, 64 level, A decisive break of that could open the door to 67.98, while if it struggled to break that level, we've seen some typical sideways movement like we've seen over here, a turn back down below the 62.50 could retest again the 60 territory. Yeah, because we have another 5 hours ahead of the Fed, I'm afraid. Good evening. Gold, okay, commodities were quite interesting today. They lose momentum, and that was due to the treasury yields, because as treasury is rising, commodities, and more precisely precious metals such as gold and silver, tend to depreciate. However, it still holds this more than a week support at 1760 and its 20-day moving average. So the outlook hasn't really turned negative in the daily chart, at least, because it's still keeping that support. Only a break of that level of 1650, 1660 could turn the tension back down to possibly 2730 or 2720, which are the next key support levels for gold. Now that's the overall outlook. Now intraday, you can see I keep extending lower, already broken the first and the second resistance of the day, and right now is trying to reverse, but with RSI below 50, stochastic rise but not sharply, nothing that indicates that there is a strong positive momentum. It seems that this rebound looks a bit limited. Okay, and yeah, for now it looks a bit of consolidation will follow, but if the 5 cross the 9, if the 9 cross below, if the 5 cross the 9, like here, we can see further depreciation, further decline for gold. Why is Ninja? Oh, I don't know what you, okay. Hit the like. Exactly. If there is a lot of, okay, there are still some strategies how to trade ranking markets, but yeah, it's better to wait for the data to come out, for the press conference to come out, for the markets to calm down a bit, so the spotlight of the week to get out of the way in order to have clearer directions for where the market is hitting towards to. Dollar trend, please. Okay, for the time being, rebounded this week, appreciated a bit. This is the weekly upwards channel. So if I go back to the daily, you can see that it posted some gains from the bottom that we have seen on Friday and Monday, but not significant. Can you see how dodgy these candles are? It didn't manage to recover not even the half of the decline of this full body candle that we have seen on Friday. So overall outlook from dollar for dollar, my dear Ram, is to the downside. You can see this continuous dip for since the end of March. Okay, momentum is still negative in the daily chart, so overall it remains under pressure. As long as it doesn't, let me get rid of this Fibonacci. As long as we don't see a reversal at least above the 38.2 Fibonacci level, which is crucial because it's the confluence of 20 and 50-day moving average. So if it doesn't get back above this level, which is around 91.65, then the overall outlook, the medium-term outlook doesn't change. It's still negative. Now, if you are interested, you can see MACD is negative, RSI is close to 30, it's at 39. So a lot of negative momentum supporting this downtrend. Now, let's flip to the 1-hour chart. We have seen it appreciated, rebounded this week, but unable to break or to sustain a move, if you prefer, above 91 levels. So the highest that it went this week was 91.09 and quickly turned down again. And we don't have a clear direction in the 1-hour chart either, because you can see flatten fast moving average, flatten RSI, flatten MACD, flatten Bollingers. So consolidation, and it is until, my dearest one dealer said, until possibly Fed is out of our way. Abiola is saying dollar will gain momentum, but wouldn't last, because COVID in early countries like in India, the news there is awful. In UK has already sent aid. US has no chance that to be safe. You are absolutely right. Actually, US also is sending a big portion of AstraZeneca. US is also sending a big portion of AstraZeneca vaccine. I don't remember how many millions, but even after the Fed is out, if we keep having India and Japan, and more precisely India, or worsening the situation, they are worsening, this might weigh on the sentiment. So we might see a rise in treasury yields, or money flows into safe havens or less risky assets. Okay. You agree with one dealer? Okay. Yes. You just joined, David. It's just a live analysis, as always, okay? So you can ask anything you want. It's not dead. It's just for today, before the Fed. Hi from Nigeria. Hi to Nigeria from Nigeria. I'm glad that you are having this interaction between you. Yes, okay, you mentioned pound yen. Is it possible that the outcome from the Fed meeting will affect pound yen? Okay, let's not forget that yen is actually a risk sensitive asset, and more precisely, pound yen, it's also a risk, and it's actually Aussie yen is the risk sensitive asset, but yen in general is a safe haven. Okay, let's not forget that. So for the time being, let me find pound yen. We are seeing, okay, this is the weekly chart. Okay, I put that on because I want you to see that is moving sideways so far the last 2 months, but overall it's been in a rally, a nice rally since March 2020. Okay, so okay. And one of the key reasons is yields again. Yields differentials between yen, Japanese bonds, and euro bonds, and Japanese bonds with UK bonds. Okay, so yields are very significant for the trying to understand why the overall trend of each currencies moving that way. So, okay, that's the weekly. Let's get rid of that. Daily ups and downs, rebounded from the lows that we have seen the last 2 weeks. Above, so decisive break yesterday above the 20-day moving average. Very full body candle without any significant tails. A lot of bullish bias has been seen yesterday, and so far today, despite the consolidation, despite the choppiness, it managed to sustain the gains that we have seen yesterday. Okay, so it's still choppy, it's still very neutral, but it managed to recover more than 50% of this latest drift. So another positive day today could turn the pound in its near-term resistance, which is, it takes us back to, come on, to this high over here, April's high. Okay, so for now we remain choppy, means very neutral sideways movement. Intraday, because you ask about Fed, even though sterling today is a bit weaker against dollar, against, however, yen remains well supported because of the yield differentials. As I said, the Japanese yields, the Japanese bond yields are way cheaper, way more weaker than the UK ones. But let's not forget the pounds. Fundamentals. Brexit is out of the way. They are doing perfectly with the vaccination program. They're well ahead everyone else in Europe and in US, okay? Also, they are one of the few countries in the world that they have reopened their economies while Europe has closed them, okay? So, in general, overall, the pound is well supported by fundamentals. Now, you ask about about the Fed, how it will affect it. So, dear Michael, it's Michael. It might not affect it directly, but if Powell comes out with spreading risk, spreading concerns today, we might see pound yen as I say again, it's a safe haven, appreciated further, but we cannot really see tell something right now. You need to have in mind that a bearish dollar outcome from the Fed, okay, if the Fed waits on the dollar, this should provide some extra tailwind to the cable and as a consequence to the pound in general. So we might see it appreciated. But we need to remain tuned with the Prince Conference and what to wait to be out of our way to see how it will affect the dollar. Will it be a bearish dollar event or will it be a bullish dollar event? But yeah, a bearish dollar Fed could support the pound because it would actually support the cable, and then as a consequence, pound could further extend gains against yen as well. Sorry, I'm a bit tired. I had also a webinar earlier. So let me see your questions. We discuss about dollar CAD. You need, my dear Berejo, you need the HF premium tools, but on low balance. What? Actually, we offer HF premium tools for free. Okay, there is a requirement for balance, but it's very low. I'm sure that you can meet it, Berejo. Slowly, with a bit patience, you can meet the balance requirement because it's not huge. It's quite low. Actually, contact support team. Let them know. They might be able to help, or maybe your agent. Okay. Then you should, dear Mitchell, Try with learning first, though. We have seen gold, guys, gold, but you have just joined, so maybe you missed it. Okay, gold remains sideways, so precious metals are really have really suffered on the rise on treasuries. That's why we have seen a bit of a decline on gold. Okay, but as long as it doesn't, it doesn't fell below this last week's support area 1760, which it was also it was a resistance back in March, which has turned into resist to support right now. So as long as it doesn't break that level, at least the 20-day moving average, it could remain sideways, or it could remain like choppy around here. So let me zoom out a bit. But okay, that's in the medium term. Overall trend, you know, that's in a sharp decline for many months now, since last year. So the fact, for those that are interested in the weekly chart, guys, the fact that last week we closed with this doji candle. Let me get rid of pivots. The fact that it closed last week with this doji very close to the trend line, downwards trend line, it might signal, and because RSI is below 50, it might suggest a possibility in the future to continue to reverse again, similar with what happened here, to reverse again, lower, continuing its downtrend. But this is a weekly chart, so overall outlook remains negative in a downtrend below its 50, below its 200 moving average, weekly moving average, below its 20 moving average, within a down channel. Didn't manage to break the channel. RSI is weak, below 54, a lot on time already. Stochastic over here is ready to cross back down again. And let's see MACD as well. MACD is negative, so overall picture remains negative for gold. Now, if you're interested in the 1 hour chart, we have seen a nice rebound over here. However, this looks to be a bit limited if we consider that MACD is aggressively lower, RSI is at 51 without really point. Has already touched 80, and yeah, let me just so it hasn't recovered 50% of yesterday's dip. So this looks to be some kind of a boost, actually a weight, a drift on dollar ahead of the Fed or something. So yeah, next resistance comes at 1777, which clash of 61.8 and 50-day moving average. If that breaks, then next resistance is at these highs over here, 1785. Now, if I put the 30-minute chart, you can see up, doji up, stochastic turn higher. They haven't really turned lower yet. They keep extending higher. Not sure whether it's something happening or just is on the speculation or is ahead of the Fed. Yeah, or possibly that's it. Bitcoin. Okay, dear. Cryptos in general have been in a sharp rally. So rebounded away from the 50-day moving average, which is nice support for Bitcoin. 2 days in a row, crossing above 20-day moving average. Yesterday's keep support so far today. So momentum is a bit neutral, at least in the daily chart. So you can see how weak these candles are. So keep an eye on the support and resistance area, 146. If it breaks, next support comes down to 130 or even 115. A break of 126.27 brings back this high into attention at 185.86. Which quiz, dear John? Why skip my quiz? I haven't seen something, John. Yeah, 10-year yields sentiment. I don't get the questions. Yes, I'm referring to the fact that yen is under pressure against a euro and pound is due to the yield differentials. Okay. It's a live analysis. What about Fed? Same as March sentiment? No. Even though they are likely to keep everything unchanged, it will be in the spotlight. It will be whether they will have to announce a tighter policy sooner than what was expected. Pound ranking, but what's the outlook on higher time frame? So yeah, I already covered that. Okay, it was for pound yen. Sorry, I didn't cover cable, but okay, using the daily chart, it has managed to sustain a move above this downtrend for 1, 2, 3, 4, 5, 6, 7, 8 days in a row. But the outlook for cable remains positive in the daily chart, but 140 is a very crucial resistance level. Okay, so it might retest it again because it has already retested it several times since March. Only a break of that level, a decisive break of that level, could extend gains and could continue all this upwards trajectory that we have seen from cable since last year, and could bring back to our attention the 142 level, or even higher, because you ask about higher time frame, dear Mohammed, the 143.72. So if you are interested in the higher time frame, keep an eye on 140. Okay, because overall in the higher time frame, overall the outlook remains positive for all the reasons that I told you. Brexit out of the way, reopening, data consistent with recovery. What else? Yeah, pretty much these are the key ones. And momentum, as you can see over here, is very well above zero. So in the higher time frame, cable remains positive, has never broken 20-week moving average since not even September, since July 2020. So very well supported. This looks to be just a pennant or a correction for the time being. So keep an eye on 140. Exactly, Shinha. That's why I cannot really help. It's a lot of consolidation ahead of the Fed. So you really need to do your homework, check how the market is doing, wait for the Fed, hear what they have to say, wait for the markets to calm down a bit, because we might see a lot of volatility, ups and downs, sharps, before the market settles. Okay? I don't think that will be the case, dear Singla. But we cannot really rely that they want to. But it's expected that they will keep now on this meeting, the bond purchases unchanged. They will not alert for fresh bond purchases, but they might say something like what the BOC did, like by saying that in the future or in the months ahead, they might trim their assets purchases. Okay, so is the comments, is the forecasts, is the hints that they will give that are crucial, but it's unlikely to change anything right now, to take any action right now. Okay. So guys, I will call it a date. I'm quite tired. I cannot see any further questions. If you have questions, let me know right now. Okay. Otherwise, I will call it a date. Oops, I missed a question from James. Aussie dollar. Aussie dollar, as I said to you, Aussie was a bit under pressure today after the inflation. Sideways, however, in the European session, trying to recover some of the losses, but remains below the well below weeks lows, weeks highs. Momentum is very weak, so the near-term outlook for Aussie remains under pressure as long as it doesn't break the 0.7070 territory. Who knows, my dear Signal? If we take into consideration, if we believe that they will probably follow Bank of Canada's actions, so Bank of Canada last week actually trimmed asset purchases, okay, and is likely actually, do we have something out? No, the statement is not out yet. But yeah, if they follow Bank of Canada's approach, we might see them trimming asset purchases, okay? But let me quickly scan a bit. So yeah, this is the case for the time being. But who knows, right? If we don't get the statement out, we cannot really tell. It's just expectations. It's just stimulations. It's just a speculation. Sorry. Actually, let me search for that. So yeah. So it depends. So ECB, for example, extended the purchase program, but Bank of Canada, which is it's quite close. The outlook is quite close to the US. Data are good in both countries. Stimulus was helping. Vaccination is in progress and so on. So they might follow Bank of Canada instead of ECB. So they might trim the quantitative easing purchases to less of what they have right now. This is what is expected. Okay. Yeah. This is the only thing that I can tell you. Yeah, he said that earlier, but maybe now we have a tighter time frame. So sooner. This is the key. Is when they will do it. whether, okay, in the past they said something about 2023. Now if they shifted closer, that could be something affecting immediately the dollar downwards. Okay, so it's the time, is when they are planning to trim, or whether they will do it right now or whether it will be on the next quarter, is the timing of the trimming of quantitative easing purchases. So this is where we should focus on power statement. Any other questions? Any other questions? So why yields increasing on bond purchases from central banks, on the boost on the massive stimulus, but more precisely on bond purchases from central banks actually. So central banks, in order to boost the economy, they are proceeding some purchasing programs since last year. Okay, so this as a consequence has the rising yields. They're buying and buying and buying. Not solely on 10-year yields, dear. 30 years yields, short-term 2 years yields, all over. It's in general, it's there a way of, when we say stimulus, to gain, um, to find those monies, if you prefer. Yeah, they have proceeded in some purchases program, which involves bond purchases. Not only Fed, uh, every single bank actually, ECB, Japan, China, uh, Canada as well. Yeah, it's not only the Fed, okay? That's why we have seen global treasury yields rising. Okay, guys. And they are selling as well, dear. Okay, I confused you. I'm sure that I confused you. Okay, I figured it out right now. Okay, okay. They, in order to control the pandemic, okay, I definitely, definitely confused you. Okay, in order to in order to overcome the pandemic recession, okay, we have seen actually banks, first of all, cutting rates to nearly zero or negative as well. Okay, so um, that uh, um, that this is not something new. Okay, this is something that has been happening since the pandemic took place. So okay, in order to the central banks to help the economy, okay, they have announced some massive fiscal stimulus, right, in order to boost the economy. Um, these this this actually um, this actually, how can I say it in simple terms? First of all, this stimulus, first of all, help the sentiment, because we had back in our minds that, okay, economy will bounce back. On the flip side, it improved the risk appetite, okay, and encourage investors to buy riskier assets such as stocks rather than bonds, okay. But we had also the expectation of inflation jumping, and we still have inflation. Is the hot potato this year, because we're expecting it to spike higher and to keep increasing in a more of a well above what it should be, to be so however, the weaker demand, okay, for debt is is an evident, especially 2020 in 2020, but also last month as well, that actually helped the treasuries pushing higher. So I think I'm getting I'm confused. Okay. Actually, you should have in mind, okay, that what is, actually I will simplify, okay, just stick on your mind that the fact that the interest rates were so low or even zero in the case of Europe, for example, okay, is something that is forcing the market participants to invest to yields markets because of the zero interest rate or negative interest rate, if you prefer. So um, um, yeah, this is what you should keep in mind, is it is the very low interest rates that are helping the yields rising. What else? No further questions? Hello, Joshua. Okay, I need to call it a day. I'm more than an hour here. So I need to call it a day. I'm quite tired. For any further questions, please let me know right now. Otherwise, I will close this session and see you again tomorrow with yeah, it's tomorrow. I think Stuart is having no, sorry, on Friday Stuart is having a live analysis as well. Um, yeah. Also, Sinclair, because your question was excellent. Also, something that driving bond prices lower but yields higher is expectations of the inflation. Okay, the higher the inflation is expected to be, the lower the bonds turning, the higher the treasury yields rising. That's why yields, especially in the US, have surged to their highest level in more than a year, okay, because of the zero interest rates, okay, and on the expectations that inflation will heat up and there is a betting on economic growth as well. Okay, these are the main drivers of yields. Hopefully I managed to help you understanding why yields are rising. Um, yeah, okay. Have a great day ahead. See you again on Friday with Stuart. Bye bye, guys. Thank you very much. Tonight, it's tonight. Tonight, who is reporting? Come on, I got confused. Think Microsoft already reported. It's Facebook. Tonight is Facebook, and tomorrow your attention should be on Apple and Facebook tonight. Very, very important, massive giants, actually, gigantic tech companies. So Apple, Facebook, Qualcomm, Boeing report tonight. And tomorrow after market close, it will be Amazon, Twitter, MasterCard as well. Very, very important earnings. Okay. Thank you very much for attending. Hope you are having a great